So what happens when the investment demand comes roaring back? Industrial demand does not pull away, and you've got 30% left to feed the investment side of it. I mean, it could just absolutely be explosive. This can be a great place to be and maybe give crypto a bit of a run for its money.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 9th through December 16th, 2024, while supplies last. First, we featured the exclusive 2-ounce silver Canadian Rockies coin from the Royal Canadian Mint at just $3.49 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Krauth from silverstockinvestor.com and also author of The Great Silver Bull. Peter, thank you so much for joining us today.
As always, Elijah, it's my pleasure.
Well, it's great to have you today. Last time we had you on, you were kind of cautioning our viewers again for a short-term pullback in the precious metals. We have seen a bit of a recovery now in both gold and silver. Where are we right now?
I think that both metals have recovered. They did have actually the pullback that I expected. I think that there's always a possibility. Look, if the dollar, for example, has a little bit of a rally, I'm not necessarily expecting that. I think that's probably done. But if it were to have a little bit of a rally, I wouldn't be surprised. Any kind of unexpected pressure could push a little bit on the precious metals. But as for silver, I think that, if we're looking at potential downside, probably nothing below, say, 28, 29. We're right around 32 if I have my numbers right now. And so I think that 30 is actually going to start to act as a new floor. And so I'm quite bullish actually going forward from this point.
That's definitely good to hear. I know last time we talked about this as well, but looking at the commercial hedgers and their positions often really give you an insight into, what the big money is doing. Are they short? Are they long? What are they? How are they positioning themselves right now?
So it's actually quite interesting because if you look at where they until about, I'm going to say about maybe a month or so ago, they were at a I'm going to say a multi-year high, just below a multi-year high in terms of short position, net short position. And that started to come off, and that actually pretty much coincided with the peak in silver right around $32, which was sort of late October. So that started to come off, which says to me that they no longer feel that, or at least they have less conviction that silver is ready to, or that there are higher odds that silver will pull back, or that it's as fully valued, I guess, at this point. So it's nice to see the commercial hedgers pull back on their outstanding, on their net position, short position in silver. It's not at its most bullish. Usually you get that after a considerable correction in the price. But it's certainly, like I say, you don't have to have that set up exactly where silver has pulled back and they reverse from a zero position in net short to move towards a higher position in net short. All that to say that commercial hedgers, the direction of their position is looking bullish as we go forward.
I guess looking forward here, does that mean that we still could see a little bit of downside from here? Because are they net short right now? Are they betting against the market?
So they are net short. In fact, they are net short most of the time, to tell you honestly. It's a matter of degree. When they become, I guess their outlook is the most bullish is when they're neutral. In other words, they have zero short position and not and I'm not talking about a long position. Like I say, it's very rare actually that you see a long position at all in the commercial hedgers. They're there basically, if you think, for example, of a mining company that has substantial silver production, you always want to protect against the risk that the price will fall. So the investment banks that they deal with, or unless they do it themselves, these mining companies, will be to protect against a drop in the price. So, like I say, the most bullish position traditionally that you see in the commercial hedgers for silver is that they're neutral, and the most bearish is when they are fully net short. And that goes up to about, I'm going to say, 75 to 100,000 contracts. Recently, they were at about 80 or 82,000 contracts. Now they've come back down to about 60 or so thousand contracts. So that's a considerable drop. And like I say, it's in the right direction. So that kind of gives you some perspective of how the commercials use silver futures, and they've gone from, the best way I can put it is that they've gone from feeling like silver has is quite likely to drop, to silver has moved away from that and has less probability of dropping from these levels. There is, I think, they're since they're relatively high net short positions, they probably do feel there is there's a little bit of downside risk, but because it has started to move away, I think that they're showing their relative bullishness in terms of the silver price.
You mentioned how $30 now will likely be a floor for the silver price. I know that has been a key level for about a decade now, and everyone was saying, if we just get above $30, it could be off to the races. How long do you anticipate that we'll be, around this $30 level before we move significantly higher?
So, my target going back to earlier this year was that we would see $35 somewhere at least by Q4. We have seen that now. We've dialed back. So that first target was reached. Honestly, I think that by Q1, we could probably see $35 revisited again. Between sort of now and mid to late March is a bullish season for precious metals. So I think that's a good time to expect that kind of, return back to the $35 level. I think it's going to be more easily maintained because this time it touched 35 and pretty much reversed after that. I think there's an easier chance it's going to maintain those levels. And then what I'm willing to say beyond that for, let's say, the rest of next year is that at some point, in the second, third, or fourth quarters, that we're going to probably breach the $40 level. And, we could get into the sort of low 40s. I think that odds are good that we're going to average somewhere in the high 30s to 40-ish for next year.
Now, when it comes to the silver supply and the deficit, we saw a silver deficit in 2013 and 2023, and it looks like we're going to be seeing a silver deficit this year as well. How big of a deficit does it look like we're going to be seeing, and how might that, I know you've mentioned before how it's kind of shocking that silver isn't rising more than it already has given the demand.
Yeah. So there actually is some interesting data recently. So the one that most people follow is the Silver Institute. And earlier this year, they were predicting that we'd have a deficit of about 215 million ounces. And now, interestingly, they've revised that down a little bit. They think it'll be closer to about 180 million ounces. Either way, we're somewhere around 20% of silver supply. So just to kind of refresh your viewers on this, the silver market is about 1 billion ounces a year supply. About 85% of that comes from mining, and the other 15% roughly comes from recycling. But demand is about 1.2 billion ounces. So we're really consuming 20% more silver than we're producing every year. And so, earlier this year, I looked at I started to dig into this to figure out how come the silver price isn't just absolutely rocketing in this kind of environment. And what I saw was that you've got inventories in the large silver exchanges, futures exchanges like the COMEX, the LBMA, the Shanghai, and the silver ETFs as well, the silver-backed ETFs. You've got a lot of silver there, but those inventories have been dropping dramatically since early 2021. So I think that a lot of the deficit has been filled by tapping into these above ground secondary supplies. I think the game is really getting really tight in that aspect. There's no doubt some I guess you could call it undocumented secondary supplies. In other words, hoards that are held privately, whatever, larger hoards, even small amounts. People are slowly sort of starting to sell it back into the market at these higher prices. But I think that's quite limited. I think these kind of difficult to measure supplies of silver, secondary supplies, are pretty tightly held and are going to want to see considerably higher prices to eventually come in to help meet the deficit. The Silver Institute themselves have said that they expect these deficits to go on for multiple years going forward. They think we're going to actually see new record deficit levels in the next 5 years. And so the picture really remains very bullish. They did revise their deficit recently for 2024 down a little bit from, like I say, about 215 to about 180 million ounces. Part of that is they think that the jewelry and silverware demand will come off a little bit. They also think that mine supply will go up a little bit. I'm not quite as bullish. I guess we'll have to see probably by, I think, next April or so when they publish their numbers, their final numbers for 2024. But I think that that's a little too conservative, frankly. I think that, one of the biggest drivers is industrial. Now, if you compare what it represents percentage-wise to total supply, if you ignore these secondary supplies, industrial is now 70% of the entire supply of silver. So 700 million ounces versus 1 billion ounces. That's pretty substantial. And a lot of that, is in applications where the silver is not replaceable. The biggest and best example is solar panels. And solar panels, although, you've got some saying, well, if we get an economic slowdown, China certainly is struggling economically. They had a big stimulus package. They're now looking like they're going to be doing even more stimulus. They have a lot of overcapacity in solar panel production, which means that there's not going to be any limit to supplying solar panels. And what I think is important is that even if there were, let's say, a slowdown, so some growth, but not the same growth as forecast in solar panel production, what's interesting is that there's a technological shift in this market. And so we're moving away from this older technology called PERC, which is an acronym, and we're moving towards much more of solar panel production being with this newer technology called TOPCon. And TOPCon uses up to 50% more silver per panel. So even if you get a slowing in the growth of solar panel production, you're still switching to a new technology that itself just requires more silver for each panel. So overall, I think that industrial demand will stay very strong. And like I say, you've got, if you've got a recession, if you've got economic slowdowns, you have government stepping in and kicking in the stimulus. So I would expect that this is going to hold up really quite well.
You were recently on the Wall Street for Main Street podcast and talking about this change in solar panel technology and how it's, they're needing more silver, as you mentioned, to make these new kinds of solar panels. You also have mentioned other technological advancements like AI and these other technologies that are really increasing the demand for silver. Can you expand on that?
Absolutely. So what's interesting is that, and this is just a great way to get a handle on some of the impact of AI. So if you compare a chat GPT query to a Google search, the chat GPT query will actually take 10 times the energy of a Google search. So, AI is certainly being incorporated in all kinds of applications today. I certainly see it all day long as I do my work. It's pretty much everywhere. And so that's implying a lot of new, unexpected, demand, or brand new sort of demand for energy. And it also has implications in terms of data, because the amount of data that's if you didn't even include AI, just the amount of data that the world is generating is just growing sort of exponentially. AI is just adding a brand new layer on top of that. And to give you some sort of basic stats on it, we're facing about a 60% increase in the amount of data that we're generating every year. If you compare the 2010 to 2013 time range, and next year we're expected to generate more data globally than the entire world did between 2010 and 2016. So the amount of data is really becoming tremendous. We've seen the big four companies like Microsoft, Meta, Google, and so on. Their Alphabet, they're turning towards nuclear. And so what's interesting is that I personally think that that's a little bit, I'm going to say it in a qualified way, but it's a little bit of a one-off. First of all, they've got the means, they have the cash, they have the technical ability, they can tap into what they need to get this done. But for them to turn to nuclear makes sense. One is that it's clean. Two, they're tapping into a lot of unused capacity. So I think that sort of to turn that on relatively quickly is realistic for them. But it also takes a lot of capital. But I think that sort of the next layer of companies that are going to have to tap into clean energy may not have that luxury. So I think that for me at least, the obvious answer ends up being solar, because it's clean, it's cheap, it's fast to permit. The one sort of downside, I guess, honestly, is probably the footprint. Because if you need to build a solar farm, it is going to take a lot of room. But these things tend to get permitted pretty relatively quickly. And so I think that solar will benefit a lot from the demand that AI brings on, and that the growth in data generation and storage will also require.
And it's still true. I mean, even though they're using more silver, for example, in solar panels, silver is still so cheap right now, relatively, and the amount that you have to, if silver doubled, I don't think that would impact the demand for solar panels that much, right? So as we've talked about before, and you've highlighted, the demand for silver is would it be the supply or demand? Economics 101, or is very inelastic, right? So can you clarify that a little bit?
Yeah, so it's supply inelastic to price. In other words, if the price goes up, the supply basically does not react. About 75% of silver supply comes from mining other metals. So just to kind of explain quickly, the 3/4 of silver supply, mined silver supply, comes from mining gold, copper, lead, and zinc. The miners of these other metals who mine silver as a byproduct, to be honest, don't care that much about the silver. The silver is sort of a nice bonus for them. It's not valued all that highly. And frankly, they're happy to take whatever price they can get for the silver. But if the silver price were to go from $30 to $60, odds are they would do nothing differently. They would accept the $60 price because it's a relatively small portion of their revenue stream, even at $60, they wouldn't go out of their way. And it's not that easy to expand a mine. It's not that easy to, get it permitted for higher capacity, all of these things. So they would probably keep churning out the same amount of silver. And as I say, accept happily this higher price for the silver, and it would just, boost their bottom line. So that's why I say its supply is inelastic to a higher price. The supply will probably not move much, even on a considerably higher silver price. And that becomes a bit of a vicious circle, right? Because, then the price goes up because the market starts to realize, hey, there's not going to be more silver coming to market, even if the price is higher. So, and to your earlier point, you're right. A lot of applications for silver require very small amounts. So if you think about an electric vehicle, for example, or a tablet, a smartphone, a television, whatever it might be, sometimes it's a few grams of silver. We're talking about a few dollars for each item. And if that, obviously everyone wants to streamline and maximize profits, but, if the price of a tablet, for example, goes up, the production cost, let's say, goes up by $3 or $5, it's unlikely they'll absorb it. But if they end up pushing, the retail price up by maybe even double that, it's not a huge increase on, a $300, $400, $500 item. And so, the higher silver price would not necessarily impact it all that much, but they absolutely need it. It's indispensable. So they'll go ahead, they'll buy it at market, they'll get the best price they can, and they'll keep putting it into the product, and they'll pass the cost on.
I know we've talked about this before, but there's also it's just the story for silver is very, very convincing, right? Because you have all these demand aspects with respect to the industrial side, but you also have the monetary side as well. We're seeing central banks accumulate gold because it is money, and silver is the common man's money, right? So at the same time, you have all these industrial factors. You have, a financial crisis potentially, a debt crisis happening, and people will rush towards what has been money for thousands of years. So you have two different, completely different factors pushing the silver price likely higher.
Great point. Exactly. It's what some call a hybrid metal, because it's really got two sort of generational drivers, right? You've got, like you say, this tech and industrial side to it in terms of demand, which really has no choice. It needs to keep consuming it. It can ebb and flow a little bit, but I like to say that it's sort of the industrial side of demand that provides a rising floor under silver, and then it's the investment side of it, the investment demand that comes and goes, so ebbs and flows more in a more pronounced way. Because it's more capricious, I guess, a little bit. And it also depends on kind of what's going on geopolitically and so on. It's more reactive. But when it comes with some dramatic force. And it could really shock in terms of the percentage it represents of the silver market. And, to my point of earlier, where I talked about how, the industrial side, like if you go back 10 years, industrial demand for silver only represented about half of the overall market every year. We're now at 70% for industrial demand, a lot of which really has no choice. It can't go away. It absolutely needs the silver. It doesn't have substitutes in almost any of those applications. And so that means now that the investment side has, instead of 50% like it had 10 years ago, it now has 30% available to feed it. So what happens when the investment demand comes roaring back? Industrial demand does not pull away, and you've got 30% left to feed the investment side of it. It could just absolutely be explosive. So I think that you're absolutely right. It can have really a huge impact in a short time. We know silver is volatile, and then the silver stocks can be that much more volatile. They'll leverage up the gains in silver. Most of them, the quality ones anyways, really will leverage silver prices dramatically. We saw that actually partly this year. I mean, some stocks were up 50, 100, more than 100% in the span of about 6 months. Silver bottomed at about $22 in February and then peaked at 35 or so, I think, in late October. So, I mean, you had some stocks just absolutely roar higher. This can be a great place to be, and maybe give crypto a bit of a run for its money.
All right. Well, Peter, we really appreciate your time today. And where can our viewers find you online if they're interested in learning more and also get your book?
Yeah, thanks for that, Elijah. So I'm online. I've got my newsletter, which is called Silver Stock Investor. So you can just go Google silverstockinvestor.com. And that's what I kind of call a real-time way to follow what's happening in the silver market. I publish every 2 weeks, roughly. And then my book, which gives you a good overview, it's a great intro to the silver market, its history and how to get invested and so on. And so that's the Great Silver Bull. You can find that on Amazon in print and Kindle and in audiobook version. I'm also pretty active on Twitter, Peter_Krauth. And I'm also on LinkedIn, so you can find me there and follow me at both of those places as well.
Fantastic. Peter, once again, thank you so much for your time today, and God bless.
Thank you, Elijah. Always a pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for December 9th through December 16th, 2024, while supplies last. First, we featured the exclusive 2-ounce silver Canadian Rockies coin from the Royal Canadian Mint at just $3.49 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.